The year 2025 is upon us, and analysts have predicted a boost in credit to the economy by banks as well as a major boost to economic activities in the coming year. The analysts' optimism stems from recent successes in the ongoing banking sector recapitalization program. They also called for measures to narrow the high profitability gap between operators in the financial services and the real sectors of the economy. The founder, Chief Executive Director, Center for the Promotion of Private Enterprise, Dr. Muda Yusuf, has called on the CBN to soften its monetary tightening stance to support investment growth and job creation in the economy. In its Nigeria 2024 Economic Review and 2025 Outlook, Yusuf also said there's a need for appropriate policy measures to correct the huge disparity in the profitability between the real economy and the financial economy. However, as 2024 fades into the sunset, it's been a tough year for Nigerians, especially on the back of economic reforms embarked upon by President Bola Tinubu's administration, which took over the reins of governance on May 29, 2023. The effects of economic changes have altered the way Nigerians live, and some will say has deepened the level of poverty in the country. Joining us now on this show this morning as we take a look at the economy ahead of 2025 and lessons learned in 2024 is Dr. Muda Yusuf, founder, Chief Executive Director, Center for the Promotion of Private Enterprise, CPPE. Good morning, Dr. Yusuf, and thank you for joining us.
Good morning, Dr. Abati. Good morning.
Good morning, Dr. Yusuf.
Thank you.
You're welcome.
Okay, Dr. Yusuf, the intro already sets the tone. Now, what for you are the major highlights in 2024 within the economy? And what are those things that you think will be the major outlook for 2025?
Well, thank you very much. Well, the major highlights have to do with the key reforms and the challenges that those reforms impose both on businesses and on the citizens. And of course, these reforms are very clear. We are talking about the foreign exchange policy reforms. We are talking about the energy sector reform, especially around the petroleum downstream sector. Also something around electricity. And of course, we have this tax reform that is, having quite a lot of controversies around it. But what is most significant has been the social costs of those reforms, and even the political costs of those reforms, particularly the impact on the cost of living and the cost of doing business. And I must say that those reforms were necessary. I think many of us have consensus around that. Of course, there were issues around maybe the sequencing, the speed, the pace, and more importantly, the measures that were taken to cushion the pains or the challenges of those reforms. We have, divergent opinions on that. But that is what it had been. Generally, on the score of the GDP, we have done fairly well because as at Q3, we had a GDP of 3.46. And the way it is looking, by the end of the year, we'll be having a GDP of close to 3.6 or 3.7. And when you look at it compared to even our projection for 2025 in the MTEF, which is about 4%, I think we are not doing very badly. And in terms of the sectoral performance, just as you said in your intro, the service sector seems to have done much better than the real sector. And the reason is that the challenges faced by the real sector, and when I talk about real sector, I'm talking about those who are in the business of mobilizing key factors of production for purposes of job creation, production of goods and services. Those sectors had to struggle. In fact, some of them had to, close shop. We saw some major companies, leaving the country on account of the challenges of the economy, particularly the macroeconomic environment. And we saw some of our service sector players also doing very well. Which brings me to the point of the disparity between what is happening in the financial services sector and what is happening in the rest of the economy. Because the financial services sector is supposed to be a catalyst. It's supposed to facilitate development. It's supposed to facilitate employment and investment. But what we have seen is a huge disparity, where in Q3, for instance, the financial services sector was growing at about 32%. Agriculture was growing at about 1.14%. Manufacturing grew at less than 1%, 0.95. The trade sector also grew at around 1%. So this dichotomy between the financial services sector and the real economy, I don't think is good for the economy. It's a major shortcoming. It's a major distortion in the economy, which I think we need to address in 2025. And related to that is the very tight monetary condition that businesses experience in 2025. Because, I mean, we find a situation where businesses have to be paying interest of about 30%, 35% in 2024, yes. So these are things that I think we need to address. I mean, I've spoken to some businesses. They took facility at about 18%, about a year ago or 2 years ago. Now they are paying on the same facility 35%. So how will those businesses survive? You know, and we have this profitability and all of that on the financial services side. So there's a need to properly align those sectors, you know, to ensure that the financial services sector play the kind of role they should play in an economy to support investment. And the government, through its monetary and fiscal policy, needs to make that to happen. And the monetary authorities also need to make it slowly in terms of this monetary policy orthodoxy. You know, we should not go to the extreme of even these market principles. The market economy principles have their advantage, but again, we also need to relate to the peculiarities of our own environment. Because right now, there's hardly any sector where you can effectively fund any project with a facility from the commercial banks.
But the president or the federal government, you know, we've been told that the budget for 2025 is a budget of restoration. So all these fears you are expressing, it looks like the budget of restoration will address all of these problems and bring prosperity, stability. Inflation, we have been told, will be crashed from 34.6% to 15% in 2025. How realistic do you think this budget of restoration is?
Well, I like the optimism of the president, and as much as possible, we should also begin to look at the optimistic or positive sides of the economy and of the outlook. As far as the budget, first of all, let me say that the budget essentially is about appropriation. You know, and when we talk about appropriation, it's about allocating resources to different sectors of the economy. And when we talk about that, you see, it is not an issue only for the federal. Because when you talk about resource allocation, the states also have resources that they need to allocate. The local governments also have resources that they need to allocate, you know. But as far as the budget is concerned, well, we are fairly optimistic, especially when we relate to some of the assumptions. You know, the only assumption that I have issues with is the one you cited. That's the inflation assumption or the inflation expectation, that will move inflation from 34% to 15%. That may be a tall order. But I can also say that we are likely to see a moderation in inflation in 2025.
What's the rebase inflation?
No, the rebasing is not about inflation. The rebasing is about GDP.
GDP.
Yes, and it's to reassess the various, you know, contributions of various sectors. There are some sectors that have not been properly captured in the last few years because the economy has also undergone a lot of transformation. So you need this regular rebasing to be able to update, you know, the data and to be able to capture the new developments as far as the structure of the economy is concerned.
The rebase, would they come to that 15%?
No, rebasing has to do a lot more with issues of ratios because we are talking about GDP. GDP, for instance, we are talking about tax to GDP ratio. If you rebase, then that may affect the ratio. If you are talking about deficit to GDP ratio, if you rebase, that may affect the ratio. But as far as inflation is concerned, inflation is about prices. So whether you rebase or not, if prices are still going up, prices are going up. So there is no very serious relationship between the rebasing and the inflation figures or outlook.
All right.
Yeah.
Okay, thank you so much, sir. Now, looking at the Nigerian economy for 2025, there are a few...
2024,
2025, looking ahead, so the outlook for 2025.
Okay.
There are a few things that have happened this year that could potentially impact positively in many instances on the economy next year. And I'd like to get your thoughts on that and to see to what extent this has the potential to impact. The first, of course, is the coming on stream of Dangote refinery in 2024. I'm seeing that consolidation in 2025. The refineries that have been announced recently, Port Harcourt refinery, this morning we talked about Warri refinery coming on stream. What's that going to do for production? And then obviously the pressure, reduced pressure on the foreign exchange, on inflation as well, that's also there. Then the proposed tax reform bill. I know you often talk about the state of the manufacturing sector in Nigeria. So these are some of the things that we're looking at to see that, okay, next year, 2025, we might just see our road to recovery, economic recovery under this administration. And also some of the investments that have come in from these foreign trips that have happened. We talked about a $1.2 billion investment in Olam Agri by the Saudi Arabian government. So these are some of the things, as well as other things that have happened this year that will begin to see the fruits from next year, 2025. To what extent will these impact on the economy next year?
Well, these are very positive developments, and these things will impact the economy positively. First, let me say that right now, the outlook for our forex, because all of these things also have implications for the foreign exchange market. The outlook is looking much better than what we have in 2024. For instance, already we have our reserves at around 40 billion US dollars. We have seen some significant inflows from the IMTOs, International Money Transfer Organizations. That is also, coming on the back of the reforms that has taken place. We have seen an improvement in diaspora remittances. A lot of diaspora population are saying, bringing a lot of investment. Some of them investing in property, investing in stocks. Some of them are investing in fixed securities and all of that, which is also very positive. And of course, the issues of some of the inflows, the Euro bond, for instance, which was oversubscribed of 2 billion US dollars. The success we also made around the domestic dollar bond that was issued, $500 million, which was also oversubscribed. And some of the efforts that have been made also in the upstream sector of the oil and gas, the new investment in gas and the incentives that the government is putting in place. And more importantly is the point you made about the Dangote refinery and some of these other refineries. Because there is what we call the import substitution effect of these refineries. Traditionally, we have been spending, or historically, we have been spending about between 30 to 40% of our foreign exchange on importation of petroleum products. So we are on the way of, completely getting out of importation. And the government has to be very deliberate about this. It's a clear possibility.
Okay, and can that happen in 2025?
It can happen. But the government needs to be deliberate to ensure that it happens. Because, there are elements there are some segments of the economy that are also benefiting from imports, who may not even want to worry about these issues of the implication for the macroeconomic environment, implication for forex and all of that, looking at the larger picture. So it is the responsibility of government to commit to ensuring that we stop this importation and we encourage those who are producing locally, to continue to produce. And we need to deploy fiscal policy measures, monetary policy measures, regulatory support to make that to happen. Because I remember that when the president presented the budget, he also highlighted it. He stated that in 2025, we are looking at a situation where we'll be exporting petroleum products. So if we're able to do that, that will bring a lot of relief, to our foreign exchange market. And that will help to improve the outlook, both for foreign exchange, for inflation, and even for the general macroeconomic outlook. But the government has to be deliberate to make sure that that happens. And even some of our manufacturers, a lot of manufacturing the raw materials that they use. They import a lot of them, and many of them are petroleum-based, like petrochemicals, you know? So if you have functioning refineries, the demand or the importation of some of these raw materials that are used for plastics and things like that, even some chemical raw materials, will come from these refineries. Okay. So there's a whole lot of benefit, but the government needs to be deliberate to ensure that we support these refineries, you know, to continue to move.
What I appreciated from your report is that I like that you acknowledged, and not in these words, in my own words, you acknowledged how lopsided the economy is at the moment. So whilst we can all agree that the statistics and the numbers look favorable, you know, you have a situation where the non-oil sector is the dominant economic sector, yet is only bringing in 10% of the revenue as far as GDP is concerned. So now, and it's the similar situation when you look at the population. If you're going to look at your GDP per capita, you're looking at probably 1% of the country carrying, you know, what looks like decent statistics when you do the calculations at the end of the day. So my question is, what do you think is the fate of the middle class, given the situation we have on the ground? When the Fourth Republic began, 38% was the number of Nigerians who belonged to the middle class. As it stands now, the statistics range from 12% to 23%. We're yet to see the numbers for 2024. The middle class has eroded. Now, I'm glad you've painted this picture of all these statistics, but none of them speak to what it will take to restore the middle class. Is it possible for us to go back to having a robust middle class in this country, given the situation we find ourselves in? Or is this intrinsic inequality the new status quo that we'll be looking at, especially given these policies that we've decided to stick with so vehemently?
Well, I think it has to do with the point you made about the sectoral disparities. You know, because if you look at even the members of the middle class, those that are in the financial services sector, you can't compare with those who are maybe in the civil service, or those who are, even in journalism, with due respect, you know, those who are in manufacturing or those who are in agriculture. Yeah. You know, there's huge disparities in terms of, you know, the remuneration, their condition of service, and all of that.
No, but middle class is based on statistics. So
no, it's based on
if
statistics.
They're not making a certain amount, let's not sugarcoat it and say that the middle classes are different. There's only one middle class, and some people have left it.
No. The point I'm making is that majority of the middle class that are having issues belong to these sectors that are struggling. That is the point I was making. And these sectors are the biggest sector. I mean, you talk about the contribution of non-oil sector to GDP. It's over 90%. That is where majority of the cities, even including the middle class, that is where they are. But look at the productivity in that sector. So we have a major productivity issue in manufacturing, in agriculture, even in some services, because there are a whole lot of issues that are affecting their performance. You know, we have structural issues, we have some of the... So it's creating a whole lot of inequality, even within the middle class. That's the point I'm making. Yeah. But majority of them are in this sector. So what needs to be done first is to ensure that we also ensure a redistribution of the gains of this reform. The gains of this reform should not translate only to revenue to government.
Thank you.
It has to translate into supporting other sectors to be up and coming. And when the other sectors are doing well, those who are, you know, operators in that sector, including the middle class, will also do well. So that is very important. If we need to do a cross-subsidy, yes, we have removed subsidy from PMS, we have taken away subsidy from foreign exchange. Let us take it to other sectors, rather than translate everything 100% into government revenue, because once resources get into the hands of government, I'm not saying they don't use it well, but there's some wisdom in ensuring that you don't throw everything into the hands of government. You still release a lot of it to the private sector, to entrepreneurs, and you also use it to subsidize some key sectors, like public transportation, like education, like health, even agriculture. These sectors require a lot of subsidy. And if you do that, that will also impact on the middle class, and not just the middle class, the entire populace. Because there's a big issue now about poverty. We are talking about gains, especially in terms of revenue, but it's not trickling down. Because palliatives cannot deal with these issues. we should have a policy approach in a way that will restructure the economy so that in sectors where we have a lot of people playing, those sectors will also grow. And with that growth, a lot of players in that economy will benefit. That is the only way that these gains can trickle down into the rest of the citizens.
Dr. Yusuf,
Yeah.
I've heard you about monetary policy. You think our obsession with orthodoxy is not working. And, well, many people also think so. But what are the specific fiscal challenges that you foresee with this budget 2025, where debt servicing will take more than is allocated to more strategic sectors of the economy? And how do you think government should address those, fiscal challenges? And I take your point about the middle class. Yes, the middle class is even segmented. There's segmentation there. Yeah. There's the upper middle class. There's the lower middle class. After all, the upper middle class enjoyed Christmas. All the hotels were fully booked. So there's still an upper category in that middle class. Yeah. It is those of us in the lower category that have completely exited that class. But you are right, all of us are in it. But if you could focus more on these fiscal challenges that nobody has even made an attempt to address.
You see, the fiscal challenges could pose a risk even to the positive outlook that we seem to be highlighting. And you also spotlighted a very critical component of it, which is debt. The rate at which our debt is growing is disturbing. And it's something that we need to look at critically going forward. Just as you said rightly, the debt service component in the budget that has been proposed is 15 trillion, slightly over 15 trillion. The total budget is about 50 trillion. That's about 30% of total budget. And when you relate the debt service to the revenue is 35 trillion. Debt service is over 15 trillion. That's almost 50% of revenue. That is if we achieve the entire revenue. If we achieve less, the percentage will be higher. So this is a major issue. And it's crowding out investment in some key sectors because one thing about debt service is that it is first-line charge. And one thing that it also creates is that it also fuels this disparity even within the economy, the inequality. Because the 15 trillion will go into interest payment. And these are interest payments for those who are investing in government bonds, those who are investing in treasury bills and all of that. That is where people are making a lot of money. You know, when you compare that to what people are making in investing in agriculture, investing in manufacturing, there's a huge disparity. So this thing will go into interest payments. So some of these financial institutions and some, high-end, that is where they put money in. So you are talking about 15 trillion going into that segment of this economy. So that is a major structural issue, apart from the issue of the crowding out of other sectors in terms of expenditure. Secondly, if you don't manage the fiscal side well, there's a risk of higher level of deficit. If the deficit is growing, then this debt thing will even grow even further. And high deficit also has a way of overheating the economy. That's a way of creating more pressures for foreign exchange. That's a way of creating even more inflation, which could bring us back to square one. So that is why, in fact, each time the CBN governor addresses the MPC press conference, he always highlighted the issue of proper coordination between fiscal and monetary to be able to achieve the objectives of inflation. So I think we need to be a lot more deliberate to see how we can reduce this deficit, how we can bring down debts. And just as my friend Dr. Teriba used to say, rather than borrowing, we should be looking at equity. We should be looking at some of our assets that you can leverage to generate revenue. It's just like a company. If a company has a challenge, you look at all the options. Does it make sense for you to go and continue to borrow at a very expensive rate? Do you have assets that you can leverage on to generate facility, to generate funds that will not cost you much? So the options of asset-based financing, the option of equity and all of that, attracting more foreign direct investment, that option should be open. there's also the option of even reducing the expenditure itself. You know, within the context of what you call fiscal consolidation. We should do a lot more of that so that we don't lose the gains that we are achieving so far. And inflation is the worst enemy of the poor. So from a social point of view, we have to be more serious, take it more seriously to ensure that we tame inflation so that this level of poverty will be moderated. And
there must be productivity within the economy.
Exactly, that is key. That
should be a key priority in 2025. Thank you very much, Dr. Muda Yusuf, for joining us on the program.